NVIDIA is the perfect momentum play in either direction. If you're a trader, I can see why NVIDIA is going to be where you're going. But as an investor, I think the worst odds are with NVIDIA.
The worst odds are with NVIDIA. We've just heard Professor Aswad Damadornian talking about NVIDIA, talking about Apple and Alphabet as well. If you want to watch the whole clip, just search his name and the interview, and you'll hear all about it. Now, he talks about the fact that NVIDIA, from a valuation standpoint, right now does not make much sense compared to some other companies out there. He says with regards to Apple, it's about even. With regards to Google, the market is still waiting to see if they can come out with another insane product like search, because the fear right now in the market is that search, while being right now the cash cow of the company, might not be the cash cow of the company in the next 10 years or so. And with regards to NVIDIA, he says from a valuation standpoint, it is very expensive and the odds are against you. Now, from a trader's perspective, he said, look, they still have the momentum, so why not? Now, NVIDIA, the stock actually in the last 3 months is down 2.5% or so has underperformed in the last 3 months. Now, we know that year to date, stock is still up 140%, year over year 170%. I mean, the last 5 years, this stock is up 2,718%. So quite the performance. Now, although the stock is up by this much, it's not like we're seeing a forward PE of 100, of 200. No, forward PE of over 30 times. Not that crazy, right? We've covered other companies that have PEs that are much higher than that, yet that are expected to grow slower than NVIDIA. Because NVIDIA, as you can see here, for fiscal 2025, not calendar year, fiscal 2025, sales growth of 100%, EPS growth of 119%. You follow that amazing growth here by another 40% top and bottom line in 2026, then followed by another 17 to 18% top and bottom line growth in 2027. So in this video, what I want to do is look at it from two perspectives. One from a reverse DCF perspective, and then another from just a pure PE standpoint, multiple perspective. So we're going to go over all of that in this video. Of course, you can share your thoughts on the NVIDIA stuff in the comment section below. When we're going to look at those numbers, I will of course add some extra information the way I'm thinking about that. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if not. We really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So for those that needed a small reminder, NVIDIA's revenue since Q3 fiscal year 2023 has gone up by 5x. Let me repeat that. A 5x increase in revenue since Q3 2023, fiscal year 2023. That's incredible. Of course, the majority of that comes from the data center. Now, last quarter revenue grew 15% quarter over quarter and 122% year over year. With regards to net income, 12% growth quarter over quarter and 168% year over year. For next quarter, it's expected to grow, revenue is expected to grow 81% year over year and 9.5% quarter over quarter. So of course, we're not going to see those crazy quarter over quarter growth that we've seen in the past, right? That 80% growth quarter over quarter. We're not going to see that anymore, or at least not for now. Now, knowing that, we can start looking at what the market expects. We've seen that a little bit before on Coifin, link down in the description for 20% off. Thank you to the 3 of you that have been using the link in the last week. Really appreciate that. So I'm writing here, Yahoo Finance is not what I'm using. Yahoo Finance is great for news related stuff and maybe a big overview of some financials of a certain company. But when you look at the growth estimates, the EPS trend, that's correct. That's up to date. I would say that's pretty good to look at. So for the current year, $2.84, next year, $4.02. I think that's quite accurate because I checked with other websites. But the growth estimates, and I've seen already a couple of other people on YouTube look at this and take this as face value, which in my opinion is a bit misleading. But okay, if you look at the next 5 years for the growth estimate, it says here 52.53% for the next 5 years. I mean, unless there is I don't know, unless I misunderstood it, right? Because I think that this year, next year growth, 41.5%, that's fine. But growth for the next 5 years, is it compound annual growth rate, or is the growth going to be from this year to year 5, 52%? That could make sense, but growing each and every year 52% is a bit much, And then you're going to get incredible numbers, and you think that NVIDIA will be cheap for years and years to come, which doesn't make much sense. Anyways, moving forward. I'm looking at here free cash flow for the last 12 months, plus the estimates for the next coming years. Now, if we look at the annual growth rate for 25 to 2027, the annual growth rate is going to be 31.83% for free cash flow. If we look at total revenue, as we can see and as we've seen before, total revenue is, of course, the growth, year-over-year growth is going to decrease, as we've seen, from triple digits to 40% year-over-year growth to then 17.3% year-over-year growth. Moving on, if we look at the next 10 years, right, of course, the number of analysts goes down the further you go. So the average year-over-year growth here from January 2025, their fiscal year, up until 2034, average year-over-year growth rate is 22.61%. It will make sense when we're going to do the reverse DCF and all of that. It's important to know what the market is expecting and what we can gather from the internet. If we look at the average year-over-year growth for revenue, that's around 23%, also the same period. Now, before going into the DCF and the P and the calculations, all of that, we have two news items here. So one, from Mizuho, 2025 GPU unit forecasts are raised at Mizuho, anticipating stronger than expected growth driven by expanded production capacity. Mizuho adjusted NVIDIA's total 2025 AI GPU shipments by 8 to 10% higher than its July 2024 estimates, citing key supply chain improvements, especially in CoWoS chips on wafer on substrate technology. NVIDIA is set to ship between 6.5 to 7 million units in 2025, including 3 million units of CoWoS S GPUs. These will largely include the Hopper and Blackwell models, with CoWoS S reaching a yield of over 99%. To which we flip here to Morgan Stanley, talking also about Hopper and Blackwell demand, which is very strong. NVIDIA's Blackwell chips are now entering volume production, with demand from major customers driving significant growth potential for the company. The Hopper H200 chips are seeing increased demand from smaller cloud service providers and sovereign AI projects. Blackwell chips are expected to see 450,000 units produced in the fourth quarter of 2024, translating into a potential revenue opportunity exceeding $10 billion for NVIDIA. While NVIDIA is still resolving some technical challenges with its GB200 server racks, these issues are part of the normal debugging process for new product launches. NVIDIA's assembly partner is reportedly on track to begin shipment of the GB200 server rack by late Q4 2024. This is great news, and by the way, their Q4 is 2 quarters from now. So the next earnings report is going to be Q3, fiscal 2025, and then we get Q4, fiscal 2025. So again, we've heard about the Blackwell delays and stuff like that. That was addressed. Now we've got some more positive news here, and that's, well, a revenue opportunity, they say here at Morgan Stanley, of $10 billion, exceeding $10 billion. Quite something. All right, now moving to a reverse DCF exercise here. So NVIDIA's trailing 12 months free cash flow sits at $46.78 billion. I put here a terminal growth rate of 2%. Of course, you can put here 3% if you want, because NVIDIA is a high growth company. But I put here 2% just to be safe, and a discount rate of 10%. So to justify today's price, the implied growth rate needs to be 23.8%. And as we've seen before, that's quite fair, right? That's quite fair. We've seen those numbers in the projections. So we could say that based on these estimates right here, $120 is quite fair, despite of course everybody saying that it's super expensive, doesn't make sense, and the odds are against you. Now, I know that we're projecting 10 years ahead. Like I said, not that many analysts project until 2034, right? So it could very well be that, yeah, maybe in the last couple of years, it's not going to grow as fast. Maybe it's going to grow only 10%, 15% or so, right? Could very well be. So let's try and do that. Let's change here. Year 8, let's do 14%, then 10%, followed by another 10%. Then of course, you reach numbers that are much lower, 26.7% lower than the price we're at today. Of course, still with terminal growth rate of 2% and a discount rate of 10%. Now you might say, okay, if you decrease this like that, then to be fair, maybe increase the terminal growth rate by 3%, even though we know it's going to grow a little bit slower here towards the end. Still, you're still going to be down 15.7% if, of course, you change those numbers towards the end. Now, on the flip side, if we keep what we said before, if we keep that implied growth rate of 23.8% throughout all of these years, and we increase the terminal growth rate by 3% because it deserves that, let's say, then we should be up 9.3%. The estimated intrinsic value is 9.3% higher than the current share price. Now again, with NVIDIA, a lot can happen, right? We can suddenly have, after that 100% growth, after that 40% growth, maybe it's not going to be 17% the year after that. Maybe suddenly they are reaccelerating. Maybe it's yet another 20%, followed by another. It can be. We don't know. That's the thing with NVIDIA right now. There is a lot of unknowns after that huge cycle, after 2026, after 2027. We don't know. We will probably know more 12 months from now, because big tech usually will tell us how much they're going to spend the next year, the next 12 months, right? So if they say or they indicate that, whoa, we're going to slow down our investments, then of course NVIDIA will get hit. But until that happens, nothing tells me that growth is going to slow down. So that's part one here. As you've seen, three different scenarios actually. Let me know which one fits the current situation better. Looking at option number 2 here, and that's purely looking at multiples, PE multiples. So EPS 2025, $3.99. That's what I've seen. That's what I've taken here, $3.99. And then if we look EPS 2025 all the way to EPS 2034, I put here a growth rate of 22%, which means that EPS in 2034 will be $23.89. Now, if we attach a 30 forward PE multiple here, the stock price should be $716, representing close to 500% upside from the price we're at today. Now, if you say, oh, that's a bit much. Okay, no problem. We have here an option for 25 PE, forward PE, 20, and 15. Even if we put here 15 for EPS 2034, that's still close to 200% upside from the price we're at today. Now, I know a lot of commenters on YouTube and on social media will tell you that, actually that's not enough, right? Because somehow only good investments mean triple-digit growth over and over, 10x opportunities, that's about it. I think 200% returns is quite something. Now, of course, we can say, look, 2034 is just too far ahead. We don't know. Lots of unknowns. Okay. Then we have here scenario number 2. We have EPS up until 2030, and here the growth rate is 16%, because as we've seen with the scenarios before, growth could decelerate towards the end of the decade, so we take that into consideration. Okay, 16% growth, we're reaching $8.38. Now the same thing here, you can put a forward multiple of 30, 25, 20, or 15. And here, of course, if you put 15, then it's only 4% upside, which doesn't make much sense because you're paying a big premium today. And so if you're only getting 4%, that's not much. 20 PE, that's close to 40%. Then you've got 25 PE, close to 74%. And then a 30 forward multiple here, 109%. Of course, if you change that growth rate up, right? If we do the same for what we had before, 22%, then we get something else, right? Then here, a forward PE of 30 will give us 168% upside. and a 15 one, a 34% upside. So you can play around with this. You can use the PE method, let's say, or you can play around here with the reverse DCF one, which makes a little bit more sense in my opinion, because then with the forward PE, you're only focused on PEs. You're not really free cash flow, in my opinion, is just a much better way to look at it. And then here you can play around, right? You don't have to stay with 23.8% year over year. You can start off with those triple digits, right? The 100%, then 40%, then 17, then stay at around 15 for quite a while and see how that goes. The discount rate can go up, can go down. That's the thing with these types of models, right? It's not a fact. No, a fact is that you can play around with those numbers until you reach a number that you think makes sense. That's the beauty of it, because at the end of the day, it's your decision. Overvalued, undervalued. For some, it's always overvalued. For some, it's always undervalued. Both can be wrong, both can be right. So that's basically what I wanted to show you in this video with NVIDIA. That's where NVIDIA could be in the next couple of years. Let me know down in the comment section below what you think about it. Have you played around with those numbers? Overvalued, undervalued, fair value? Let me know down in the comment section below. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.